Welcome to another episode of 10,000 Roads to Financial Independence. Today I have a guest, Lisa Hylton, with us. That's Hylton with a Y, not I. Welcome to our show, Lisa.
Thank you for having me, Elisa. I appreciate it.
Yeah, so Lisa has been taking a leap into entrepreneurships. She's worked in a corporation environment for over 10 years, and her specialty is in tax accounting, all that great like advices with tax, which is really related with investment. And she has taken a leap into entrepreneurships for syndication, and she's currently involved in multiple projects in terms of apartment syndication and she really have a specialty in creating fund of funds for investment purpose. So this way, investors can invest with her into multiple different projects. Welcome, Lisa. Thank you so much for your time today. I'm really excited to get our interview going. Um,
Yes.
yeah, so let's start with our first question. So we always ask our guest, like, who, when you think about a some incident that is very influential or a person who's very influential in your childhood that shaped who you are as an entrepreneur?
Mm. So before I answer that question, I just want to clarify one quick thing for listeners. My background hasn't been tax, so I just love helping investors with tax efficient real estate investments. But I wouldn't put myself out there as a tax expert. So I just wanted to
We
clear that
always
out
have
real
to put these
quick.
disclaimer, yes. Yeah.
But yes, to answer your question, for me, where I'm at in my journey right now, I would say that the person who immediately came to mind was Monique Hom. And she wasn't someone in my childhood, but she was someone I met in the last couple of years. And meeting her has totally changed my trajectory. Like, I am on the path I'm on because I met her.
Mhm.
And she shows me like that it's possible. And it's almost like those lighthouses out in the distance
Mhm.
that help you to know that you're on the right path, that are shining the light. And then your ship is continuing to sail along the path that you want to go.
Yeah,
So, yeah.
that's awesome. And so, Lisa, like, tell us a little bit more about kind of like the whole mentality shifting. You know, you worked in the
Yes.
corporation world for a very long time, starting with KPMG, and then into PwC. So tell
See,
us a little
yeah.
bit about that journey, like, and then taking the plunge into the entrepreneurship.
Yeah, what's so interesting, recently, like I'm in the middle of finishing up a raise and I was reaching out to some, old friends from like college. And in one of the conversations, like, on Facebook, you can see all the historical conversations. And
Right.
I could see like back in 2006, I was talking to her, I was asking about like business and like creating a business. And I didn't realize that even back then I was thinking about business. But, you know, for me, like the journey has been one that maybe for a long time I've suppressed the call. It's like the book called The Alchemist comes to mind when I think about my journey,
Mm-hmm.
in the sense that there have been times like where I probably was called for business and entrepreneurship many years back, but just the life of corporate has been very comfortable. And I knew that I had to leave. Like I had to cut off the paycheck because if I didn't, I wouldn't, I don't think I would have fully found the courage to do the things I needed to do to show up to build a business. And for some people, it's like them having to go to a gym in order to work out.
Mm-hmm.
Like for me, I don't need to go to a gym to work out. I do my workouts at home consistently, no problem on my own. And there's some entrepreneurs who can build multiple businesses while working full time with their with their main job, and that's awesome. But just like how there's going to be some people who are not going to be able to work out at home because they actually need to be in the gym with an instructor on them and all that stuff, is the same way for me. I realized that in order for me to show up fully in my syndication business, I needed to create a foundation and as well as a framework in order for me to cut off the job and to fully focus on doing the things I needed to do and to show up fully in my light.
Yeah, that's awesome. So really kind of burning the ship is the method that you
Yes.
took over there. But you mentioned about setting up the foundation and the framework.
Yes.
How long did that take you, and what is that foundation and framework for you?
Yeah. So for me, couple things. The first one was I needed to set up a financial foundation. The financial foundation it was the easiest thing to set up, far easier than the emotional and mental foundation. For the financial foundation, everything from, funding consistently. I chose at the workplace I was at, I chose like the high deductible plans that came with HSAs, and I would fund them and have them fund the rest so that they were fully funded for years and years and years. So that way, when I was ready to leave, I would have HSAs that had enough money to cover like a high deductible plan, and then the rest of the money is invested in the market. Um, Consistently invested in like 401ks during the time that I was there. So that way I had retirement money that was running. During that time, I also invested passively in different syndications. So I invested in a total of 5 syndications that kick off cash flow monthly or quarterly, depending on the kind of deal. Uh, and then saving, oh my goodness. Saving because like I knew that I didn't have like a business that was kicking off cash flow. I
Hmm.
worked many long hours,
Hmm.
typically, you know over the past year, it was not unusual to start working at like 8 in the morning and not stop working until like 8, 9, 10, 11, 12 o'clock at night, especially around quarter end.
Hmm.
So it was definitely challenging balancing both, but I use that to save. And like there would be people that asked me to go traveling, and I would just say no.
Yeah, sacrifices.
Because like I knew the goal I had, and I knew that other people were not on my path, and I
Mhm.
couldn't expect them to be on my path because my path was my path. It's almost like when you're called to do something, other people aren't called. You're
Right,
called, so you need to do the things you need to do for you.
right.
So for me, that's the financial package. So I wanted to make sure I had at least. I looked at my burn rate. I'm an accountant, so I run numbers. We do projections. That's what I did for work for these funds. So I could run the numbers on my finances. I could see how much it would cost me to live in one of the most expensive cities, Los
Yeah,
Angeles,
yeah,
because I wanted to be able to live right here and build my business right here.
nice. Yeah,
And
so
that
really
meant
having a clear goal. Yeah.
exactly, that meant making sure that I had enough money to do it. Many people, when they, old coworkers, they're like, "Oh, did you leave?" I'm like, "Nope, I'm right here."
Yeah, yeah.
Because I made sure to make sure I saved in order to do it. So I looked at my business expenses, my personal expenses, and what it would take. And I worked and I kept going until I saw that, okay, I'm at a place where I have at least 2 years. I'm going to take, and then I hired a business coach.
Nice.
That now brings me to the next thing. So
Yeah.
there's two things, the finances. And then the second thing is like your mindset.
Hmm.
I don't think I would have pulled the plug if I didn't hire the coach I hired
Hmm.
this year.
Hmm.
She totally came into my life and said, "Lisa, like, what would happen if you just took a chance for 12 months
Right.
and went full out?" And I said, hmm. And she said to me, she was like, "Give me a day, give me
Yeah.
a date." And I gave her a date. And when I gave her that date, I wasn't sure what I was going to do it or not.
Right.
But by giving her that date, I committed to showing up.
Yeah.
And, you know, it's almost like the whole road sort of transpired because as I got closer and closer, I knew I needed to give time by a certain time.
Yeah.
And I did.
Yeah.
And yeah, and then I
The
just cut it
mindset.
off. And it was the most emotional time ever.
Yeah. And then there's probably more to come. But
Yes.
that's
So yeah.
awesome because it's like just the mindset shift. As you said, there's the tacticals, which is the financial part, and then there's the huge mindset change. And then I think that's amazing. And then so I have some questions for some listeners over here. They're planning on their exit. How much runway did you kind of plan for yourself? And now you are an entrepreneur.
Yes.
How much do you think you should have, hindsight 2020, like should have budgeted for yourself?
Yeah, I am pretty happy with my runway. I did 2 years
Hmm.
of personal and business expenses.
Yeah.
Um, and for some people I've met have done less.
Hmm.
Few people I've met have done more.
Yeah.
Most people have at least some kind of business that's kicking off money as well.
Hmm.
So I sort of look at my investments and think, okay, well, they're kicking off cash. So
Hmm.
there's that.
Yeah.
You know, I I'm glad I did what I did when I did
Hmm.
because I've already seen changes in how I show up in my business.
Hmm.
Because I have been running this business now for about 2 years.
Hmm.
And in the first year or so, I didn't always show up
Hmm.
because I had a job that was giving me a paycheck.
Hmm.
So when certain things like weren't, like for instance, I think about raising,
Hmm.
capital on my deals.
Yeah.
And if you just you have your list and that's it, you send out to your list and you think, okay, then you're done.
Yeah.
And then this time around, I was like, okay, my list isn't saying anything. I'm
Yeah.
going to go and reach out to other people that I
Right.
know in my circle.
Yeah.
And that took a lot of time.
Hmm.
But I did it because I had more on the line and I was more committed and I was more dedicated.
Hmm.
And I had the mental capacity to do it.
Hmm.
Um, my mind has so many ideas. And I felt that when I was working full time, I had the ideas too, but
Hmm.
they were trying to come through even though I had so much work to do. So
Right.
it was like, okay, I'm going to come back to that. Let me just keep going on this work to try and get the work
Right.
for my paycheck done. So that way I can come back and go deal with that idea. Whereas now it's it's amazing.
Right. Yeah. Because you just there's no excuse on not doing this anymore. Um,
Yeah.
That's awesome. Now let's kind of shift gear a little bit. Tell us a little bit about your first deal.
Yes.
When you're turning into, I know you passively invest in a lot of deals.
Hmm.
So as a passive investor, there's a lot of things that you have learned from there.
Right.
Can you kind of share with our listeners on the a few tips, like 3 or 5 tips on passive investing if someone wanted to get started with that?
Sure, sure. I think tips I would give to passive investors, number one is education. I think it's super important to get educated. You can see here, Easy FIU University, so important to learn about the asset class
Mhm.
that you like to invest in, be it multifamily, self storage, whatever. There's so many.
Mhm.
Learning about them, learning about what are the key assumptions that are unique to this particular asset class,
Mhm.
and understanding how, what are the risks and how you can mitigate the risks surrounding these assumptions that are key, that goes into the performance of this asset performing as it should.
Mhm.
um, so that way you are educated about what's going on.
Mhm.
And then you can ask better questions, and to ask questions to whomever you are talking to, whoever's brought this deal to you. Number two for me has been getting to know sponsors and
Mm-hmm.
operators. Spending the time listening to podcasts, reading their blogs, getting to know them, getting to know their investment strategy, getting to know, about them, and following your gut instinct. Like, if something doesn't feel right, just follow your intuition and really, like, be in a like just trust that, because sometimes by just taking a minute to think about like what is going on, it can really help you to avoid bad situations
Right.
that sometimes it's impossible to see even by looking over the numbers and reading everything and looking at the market and the whole 9 yards.
Mm-hmm.
Sometimes you just got to come down to it and say, hey, at a gut level, do I, after all is said and done, do I want to go through with this?
Right.
The third thing that I would say to investors is invest based on fundamentals.
Mm-hmm.
So a lot of people come to me and they're like, oh, I'm going to go invest in Louisiana or somewhere else. Not that Louisiana is bad, but that's just really not my market. But, looking for markets that have strong job growth, strong population growth,
Mm-hmm.
population trends that are going up and not going down.
Right. Yeah.
Strong rent growth. Google online the city, drop pins on the property and look around the neighborhood on Google Maps
Mm-hmm.
and sort of see like what's there and like how the property looks and things like that. To me, I think it's like really important to invest based on fundamentals and less based on like a feeling,
Mm-hmm.
or anything. Like, yeah, I just believe strongly on fundamentals.
Mm-hmm.
And then lastly, I think that what I would also say to passive investors is whenever possible, seek to get to know, um, whatever market they're dealing with, like make sure that the operator has actually done this kind of business plan before,
Mm-hmm.
or they have someone on their team that has the experience to do it.
Mm-hmm.
I think nothing is wrong with working with someone who hasn't necessarily done this before,
Yeah.
but you would want them to be partnered with someone who is,
Mm-hmm.
and that person is also has um, skin in the game, and they care about the deal because they're putting their money into the deal in addition to this person who's getting experience. And
Mm-hmm.
that's what I would say is super important for passive investors.
Yeah. Yeah. These are great tips. And Lisa, I know that you have some sort of education material on your website as well. That
Yes.
first, obviously, we couldn't cover all the great tips that she would be giving. Can you
Yeah.
tell us, share us, how someone would be able to kind of follow up with that?
Yeah, sure. So there's a beginner's guide on real estate syndications,
Mhm.
and you can get it by going to lisahylton.com, and that's Hilton with a Y, / easy FIU.
Okay.
So easy FIU on the end, because this is the podcast you're listening to, and you can easily grab that.
Perfect. Awesome. Thank you so much, Lisa, for creating a
Yes.
special link just for us. I feel
Yeah.
really honored. We'll definitely drop that link down in the show notes below, and make sure you check it out in terms of guidelines for passive
Yes.
investing. Sounds like a really great material. And so, Lisa, as you kind of like moving up in terms of your entrepreneurships and etc., you kind of encounter, so your specialty inside of syndication is to do with it, capital investor relations and
Yes.
etc. And you also shared with me before that there are different ways to raise money.
Yes.
There's the legal way and there's the I don't know way. So can you share with us a little bit more about the knowledge on what is a good way to raise money or the legal way to raise money? Yeah.
Yeah, totally. So, in my opinion, like you have your 506C and 506B offerings. So, 506C offerings for accredited investors only. So, those offerings you can publicize, share publicly, and but illegally, like if you took in people who are not accredited, that would be illegal.
Mhm,
So that's super important. Then 506B, you need to have a relationship with someone, with the person who is creating that particular entity, be it the fund manager or the operator themselves,
mhm,
whoever you're investing with. You would need to have that relationship with them before investing. For me, I think the way I sort of run my business is, if I'm doing a 506B, I like to at least give at least 30 days after I'm meeting someone to
mhm,
then before I'm like introducing deals to them, and then sharing educational content, as well as just getting on the phone and understanding what their goals are and like what they are interested in investing in. I think that's really important.
mhm.
But yeah, and yeah, I do focus on the funds.
Yeah, that's awesome. And then you talked about potentially funded deals through funded funds. And can
Yes.
you just kind of explain what that even is? Yeah.
Yeah. So in 2019, I did create a fund to invest in a deal. So, what that looked like, it was a single purpose vehicle. We created an LLC. Our investors, it was a 506B raise. So, our investors invested in our deal, and then our deal then became an LP with the sponsor.
Mhm,
And that then, so that is one example of a fund structure. But
mhm,
there's so many other ways in which you can structure a fund. Funds can be blind, for instance, where it will have a strategy. Say it's a multifamily fund, and you like this particular operator or this particular fund manager, and you decide to deploy capital to that fund. So, like maybe the minimum is 50K, so you put 50K in that, and then you get exposure to all the assets that are in that particular fund.
gotcha.
Um, so yeah, so there's pros and cons to the fund structure.
Yeah, so can you kind of help us understand a little bit about the pros and the
Yeah.
cons with a structure? I can kind of probably think of some on my head,
Yeah.
but you know, you probably know this a
So
lot better.
some of the pros of the fund structure is that, number one, which is this is the biggest pro, is that typical real estate syndications, minimum investment typically is 50K. So 50K gets you exposure to one deal, maybe two, because sometimes you'll have a syndication that has two deals. And then there's others that have like a portfolio of deal, but like that's rare. I don't see that a ton, right? So your 50K gets you exposure to one deal. Whereas if you then invest into say a multifamily fund,
Mhm,
that fund could have 80 multifamily
mhm,
properties, or it could have five multifamily properties.
mhm,
Whatever the case is, the fact that it has more than one, your 50 now has exposure to more than one asset.
mhm,
And that helps to diversify the risk. It's almost like investing in an index fund,
mhm,
because now you're not only in just one stock, but you're in like thousands of stocks. Maybe it's an S&P 500 index fund. So there's 500 different stocks up in there.
mhm,
So similar to the fund is similar in that way. So that I would say is a couple of the biggest pros. The other pro is for someone who is busy and low on time.
mhm,
You probably don't want to keep looking at deals. Let's be honest. I invested recently passively in a deal, and it took me a little bit of time to get to the point where I was ready to invest, because I was investing with a new operator. So I had to spend time getting to know them,
mhm,
and then getting to know the market because I was investing in a new market.
mhm,
So both of those things takes time, and if you're doing that for every single deal, like it can add up. So
mhm,
that's another reason why someone might choose to invest in a fund, is because they are able to do that due diligence up front. They're cool, they're very comfortable with this operator. They may have invested with them several times on single asset deals,
mhm,
and they're now like, you know what, they've delivered, I'm very happy with them, so then they move forward.
mhm,
uh, On the other side, so some of the cons of investing in a fund.
Mm-hmm.
So I've worked on funds my entire career. So I have seen funds that have been around for a long period of time.
Mm-hmm.
They're older than me, and I was taking care of them.
Yeah.
Um, so that's, a part of it is, if you are dealing with fund managers that maybe didn't sell at the time, at an ideal time, then they're holding the asset to continue to find the best time to sell, so that way they can produce the best returns for investors.
Mm-hmm.
And that could mean that the fund could run on for longer periods of time.
Mm-hmm.
Um, then you have, funds in general can have expenses as well. So most of the times, investors are getting returns that are net of expenses, but you just want to make sure that that is the case,
Yeah.
that the returns that are being presented to you are net of expenses. So that way you are comfortable with what's going on there.
Right.
You also want to ask what the expenses are. So
Mm-hmm.
you just get a feel for what they are. And that is one of the ways you can just do due diligence on properties too. Different deals is you just look to see like what the different expenses are on a variety of different deals, because that can help you to determine what operators you also want to invest with and which ones you don't want to, based from a fees perspective as well.
Mm-hmm.
Or you can give them feedback, so that way they may decide that, what, this isn't something that they want to do. Connected to the fees, I also like to see when operators will say, if they're unable to uh, pay preferred return to investors, they will forego their fees. I like
Mm-hmm.
seeing that, like in the offering memorandum, not in the offering memorandum, the PPM, the private placement agreement.
Mm-hmm.
So that's something to look at, because then that means they're aligned with you. They're not just going to go get paid, and they know that they're not going to pay you your preferred return.
Mm-hmm.
Um, so yeah, those is what I would say are some of the cons.
Mm-hmm.
But you can mitigate many of them by just doing your homework. As I said, some of these key things that I said, there's so much more. Like, funds are pretty amazing,
Yeah.
but they can also be a little bit challenging. You just need to know what you're doing.
Yeah, awesome. And then so as a business for yourself, how does the fund manager then gets paid? Because as
Yeah.
a business, you always were thinking about profit. So as an owner of the fund, what how do you get paid?
Yeah, totally. So it can vary widely. It
Hmm.
can vary widely. So it really depends. Sometimes what it could look like is you charge your own fee at your level, at your fund level.
Hmm.
And many times that it will work fairly well, especially if you're doing a 506B raise,
Hmm.
because investors wouldn't have access to the deal otherwise.
Hmm.
So it's honestly, you still get a really good return in terms of what you're seeing. There are other, strategies as well. You can talk with the operator and sort of ask them, hey, if you're going to place XYZ amount of capital, would you be willing to maybe waive one of your fees, or maybe give a discount or something like that? Like, you can ask them and negotiate to see if they're willing to help in that space. But yeah, like, that is some of the ways that it can be done.
Gotcha, gotcha. That's awesome. Because I always had the curiosity on like how does the fund kind of works and this and that. So very excited to kind of talk to you about that.
Sure.
And so what is your kind of goal? 1 year goal, 2 year goal, 5 year goal? The anyway, so a mid long term goal for your business.
Yes.
And the why for your business. Yeah.
I think so. Yeah, great question. I would say mid-term goal. So that would be like by the end of this year.
Mhm.
My goal is to um, increase my ability to raise to at least about, like, I would say my goal is about 2 million. So
Mhm.
that's where I'm trying to go in terms of my raisability by the end of the year.
Mhm.
Um, Also by the end of the year, like, I would also I haven't totally fleshed this part out in terms of a goal. Um, but I really want to maybe protect, like build a business, another part of my business that sort of helps people in addition to real estate investing, but maybe like either coaching or masterminding or something like that. Like I just really like the aspect of like facilitating, getting groups of people together to just meet, connect, grow. Right now, I actually do a weekly WAM
Yeah.
because I read this book called The 12-Week Year. So on a weekly basis, myself and a few others, it's a very small group, meet and we discuss our goals and like our metrics and stuff like that. And I have found it to be extremely beneficial for me in my life.
Yeah.
So that's what I would say.
Yeah, because
So yeah,
accountability really on the entrepreneur setting without work support, because at work, the benefit of the W-2 job is that you could have mentors or coworkers at that
yes.
structure, but being on the entrepreneur side, oftentimes you need that kind of group support, but maybe at a higher level.
Yeah. And then when I look out into the future, I see a real estate investment firm that creates funds that enable people to invest in and get exposure to all different asset classes.
Mhm.
Um, and I love that. I love the idea of that. It's just so awesome. I just see, masterminds that I've put together. I see a network of
Mhm.
entrepreneurs and business owners and maybe even corporate employees that want to, like, if they're interested and want to come in,
Yeah.
like, just being connected to a network because you're so much powerful when you collaborate and people are encouraged to find their unique abilities in
Yeah.
life because when you find that and you start honing that and you start getting better and stronger,
Mhm.
like it's just amazing. And then when you um, connect with other people who are in their that are operating in their unique ability and brilliance, it's just
Yeah.
amazing. It's
Yes.
amazing. Explosive things happen. Your business grows exponentially and you help thousands and millions of people, like,
Mhm.
to achieve their goals and to, you know, find inspiration to do things that they wouldn't have thought about doing. Like,
Yeah.
I want people to invest in real estate, but I also want people to start doing things that they want to do.
Mhm.
Like for a very long time, I have worked in corporate positions where people around me who are stifled,
Mhm.
like they themselves don't believe in their ability to do whatever they want to do in life. So
Yeah.
they've chosen to take a safe path
Mhm.
because they feel that this is what they must do.
Mhm.
And I hope that as they see me out here facing the unknowns and uncertainties of life, they realize that, you know what? Maybe they could too.
Yeah. Yeah, that's really inspiring, Lisa. And tell
So,
us a little
yeah.
bit about your podcast, because that's kind of what you try to
Yeah.
do with your podcast, right? The Level Up REI.
Yes.
Yeah.
Yes. So the Level Up REI came to me. I remembered when I was like thinking about doing a podcast. And then the name came because I was listening to Sierra's song, Level Up.
Hmm.
And yeah, I love Level Up because in leveling up, it's almost like flying a plane. Like
Yeah.
when the plane takes off, everyone needs to be seated. There's no one walking around,
Yeah.
and you're gonna go through some turbulence to get up to the flying altitude.
Hmm.
But like you just keep going, all the plane goes all the way up until it reaches there. And for me, that's leveling up. And
Hmm.
that's what my podcast is about. It's helping people to level up to that new flying altitude and knowing that you're going to get through some turbulence and you're going to feel that gravity
Hmm.
pulling you back down.
Yeah.
But to say, you know what? I'm going to the cruising altitude.
Yeah.
There's another altitude and I'm going up there. And Somehow I'm gonna get there.
Yeah, that's amazing because I think you do very well. And yeah, I can totally just kind of visualize like the plane level of leveling up and
Yes.
going taking off. That's awesome. And so Lisa, like, how do people check out the Level Up REI podcast?
Yes. Yeah, the best place you can go is just right to my website, lisahilton.com/podcasts. And then it's everywhere, Spotify, Apple, definitely, you know, listen, lots of really amazing episodes. I drop once a week, every Tuesday, brand new episodes.
Mhm.
And yours truly will be on. So she'll be on soon. So you guys need to come check her out when she comes on. And yeah, I also have once a month conversations with passive investors or passive investor chronicles. So it's either me sharing my stories passively investing since I've invested in 5 deals to date,
Yeah,
and or having guests on sharing their stories. So conversations with passive investors.
yeah.
So yeah, I love it. It's been amazing.
That's awesome. That's awesome. And once again, Lisa, where do we check out? How does people contact you? Where do we check out other resources that you have to provide?
Yeah, totally. So if you go to my website, lisahilton.com, I have a blog, tons of blog content. It's on there. There's also another freebie that's on my website, which is my passive investing made easy series.
Mhm.
It's a 5-day course that just breaks down passive investing. So yeah, my going to my website is one stop shop, lisahilton.com. And then getting my freebie for this show, lisahilton.com/easy FIU.
Oh, thank you so much. We're going to put all that resources, goodies on there. And thank you so much, Lisa, today for your participation in our show. And
Yes.
we look forward to come on to yours.
Yes, thank you.
Awesome.